Hello, in this lesson we are going to discuss the monetary policy of cryptocurrencies. Because at the end of the day, no matter how good a cryptocurrency is, it will inevitably, especially in the short term, have to fit in with the way the government works, and maybe the government will have to adapt. I have no doubt that will be the case, but it's important to discuss the laws and regulations, and in this video we are covering the monetary policy. First of all, what is monetary policy? What does this mean? So it is essentially when a central bank controls the supply of money. So this can come in various forms, whether it's printing more money, it could be something as simple as switching. So in the case of banknotes, switching notes or coins for an updated version, which is what they've done in the UK recently. They've updated the £1 coin. We're in November 2017 as of creating this video. They've recently swapped the £1 coin for a new coin. Instead of it being fully rounded, it has edges now. It's still pretty rounded, but it is a new coin. They swapped out the £5 note for a new one, and they recently just swapped out the £10 note as well. They'll probably do it with the 20 and the 50 as well. So the new notes, they are waterproof compared to the older notes. So it could be various reasons why they're swapping them out. Maybe they're swapping them because they want to put somebody else's face on there. Maybe they're implementing more security measures into the actual currency. A lot of the case that is the case. So controlling the supply of money. So that's what a central bank can do, and they can also partially control inflation, and this can be done to ensure stability and trust in a currency. So I did say partially control. You might come across some economists that'll say they can fully control inflation, but at the end of the day, that's not the case, because there will be certain factors, whether they're man-made or natural, that can and do occur that can make the currency inflate or deflate. So they can't fully control inflation, but they can help, or they can direct a currency towards inflation if they want, and they usually do it around this ethos of ensuring stability and trust in a currency. It's sort of a way of, they say it's a way of showing the economy is growing. They say that a little bit of inflation is good. If you have your own opinion on that, feel free to reach out, and I'm more than willing to discuss it. So how does this all fit into cryptocurrencies? Well, the cryptocurrencies, they're not regulated by a central authority such as Bitcoin, but there are some crypto is controlled more by a central authority, or some, like I believe it's Dash, is controlled by a voting system. So for that reason, it might not be controlled. It will depend on what currency you're talking about. So when we're talking about the monetary policy in this video, we're talking as a generic term for cryptocurrencies as a whole, and a lot about Bitcoin, because at the end of the day, that is the biggest one. Who ensures and guarantees stability? At the end of the day, in a conventional system, whether you think it's fair or whether you think it even works, the government ensures stability through inflation or other means. But who ensures it in a decentralized, distributed system if something were to go wrong? And especially if only one country were to implement a particular currency. Because it'd be one thing if the entire world implemented, let's say, Bitcoin. Then if that's the only currency, then the whole thing about stability and ensuring that really isn't a thing, because everyone's using the same thing. But stability is an issue because, like, I'm in the UK, and the UK uses the Great British Pound. In the United States, they use the United States dollar. In Canada, they use Canadian dollar. In many places in Asia, they use rupees. They use yen. In China, so for that reason, they need to ensure stability. But if only one country is using cryptocurrency, how do they help ensure it? So that is an issue. And inflation. So we mentioned that a central authority can help control inflation, and they can use that to essentially ensure stability and sort of just growth in the economy. But this isn't controlled by a central authority. Again, I'm not saying that's good or bad, but how does that tie into the monetary policy of today? How will policy makers think about this? With conventional currency, a single person, or not person, a single authority is liable. Even whether or not they're to blame for something happening, that's not the point, but they're liable for handling this. They're liable for making sure it's stable, that it's working. AKA the government, this central bank. So no single one is liable in a cryptocurrency, especially something like Bitcoin. So how does that really tie into all of this? And another thing that we need to think about, who handles lost money? In a conventional currency, if money, like, the central bank and the government actually factors this in. So money getting lost, whether it's physically getting lost or it's got burnt or it's no longer usable, whatever has happened to it, so they'll just print more out. So if there's a certain year something happens and instead of 10% of the money not being usable, it's 20%, they'll just print more. Whereas in a cryptocurrency, especially something like Bitcoin, where the currency is mined and it's baked into the actual core algorithm that only X amount will ever exist, only X amount generally can be mined per year, the difficulty increases. At the moment, not much money is lost in cryptocurrencies. But what would happen in this unlikely scenario? Well, I think it's important to talk about the unlikely scenarios because those are what make and break a system. What would happen if, for some reason, 50% went? That's a big deal if you can't print or you can't issue more coins. So who handles all of this? So these are definitely important issues that we as individuals need to be thinking about, and also the central bank needs to think about it, policy makers, politicians need to think about it, the government in general. But at the end of the day, it is becoming more and more difficult to ignore cryptocurrency. So for that reason, we need to fix up. We need to think about these issues. We need to talk about them because I don't have a solution for all of this. No single person does. but we need to think about them, because this is not a slight change in the conventional currency system. This isn't going to be like going to the internet. This is good. This can be more disruptive than that. So for that reason, we need to make sure we are prepared for when this does become a mass market currency that is adopted and wants to be adopted by a lot of people. And also another thing is, when the next economic crash occurs, which I'm positive will probably happen within the next couple of years. If you look at stuff like the VIX and other indexes and other metrics, we are due for another crash or another reset. People will look for alternatives. They usually go to gold, but this time they'll go to cryptocurrencies. A lot of people will. So how will the government, from a monetary perspective and a tax and other just law and regulation perspective, handle this? So this has been quite a heavy video, so feel free to go through it again, have a look at what we covered. If there's something that you're not sure about, feel free to reach out. I'll guide you through it. And as usual, thank you for watching, and I look forward to seeing you in my next awesome crypto lesson.